Recent analysis highlights that commonly used indicators like insurance penetration and density fail to capture the true level of household financial protection in India. Insurance penetration and density. Insurance penetration and density are widely used indicators to assess the size and development of the insurance sector. Insurance penetration ratio of total insurance premiums to GDP. Insurance density per capita premium paid usually in US dollars. These indicators are internationally accepted and are useful for cross-country comparison and tracking industry growth. However, their interpretation often leads to misleading conclusions about insurance coverage and financial security. Limitations of these indicators focus on premiums, not protection. Both indicators measure premium collection, not the extent of financial protection provided to households. They do not indicate how many people are insured, rather do they show whether coverage is sufficient to replace lost income. Thus, high premium growth may not necessarily translate into better financial security. Misleading interpretation in public discourse. Insurance penetration is often equated with coverage, which is incorrect. It reflects industry revenue relative to GDP. Changes in GDP growth can affect penetration without any change in actual coverage. Similarly, insurance density does not account for income differences across countries, making international comparisons misleading. Factors distorting insurance indicators. Several factors are distort these indicators without reflecting real improvements in protection. Economic growth. Rapid GDP growth can reduce penetration ratios even if insurance uptake increases. Product strategy. Insurance may sell high premium products, raising penetration without improving coverage. Regulatory changes. Policy changes affecting commissions or product design can temporarily alter premium trends. These factors show the fluctuation in these indicators do not necessarily reflect changes in insurance adequacy. Gap between premium and protection. A key issue in India's insurance sector is the mismatch between premiums paid and actual protection received. Insurance products are often marketed as saving instruments rather than risk protection tools. As a result, premiums may be high but coverage remains limited. Life insurance settled over 10 lakh death claims, paying around of Rs 33,000 crore with an average payout of about Rs 3.3 lakh per claim. While the 97% claim settlement ratio indicates efficiency, the relatively low payout suggests limited financial support for families. For most households, such payouts may not provide long-term income replacement. Rethinking the concept of underinsurance. India is often labeled an underinsured country based on the low penetration and density figures. However, these diagnoses may be flawed. Many households already possess some form of insurance, individual, employer based or government schemes. The real issue is inadequate coverage, not lack of access. Thus, the focus should shift from expanding reach to improving the adequacy of insurance coverage. Need for better management. A more meaningful assessment of insurance should focus on protection rather than premium flow. Key question to consider include how many households actually have life insurance coverage, what is the level of coverage relative to household income. Such indicators would provide a clearer picture of financial security and help design better public policies. The required data is largely available through regulatory filings, census record, and insurance databases, making such measurement feasible. Policy implications. Improving financial protection policies should prioritize adequate life cover rather than merely increasing premium volumes. Product reforms. Encouraging pure risk-based products like term insurance can enhance protection. Better data framework. Developing new metrics focused on coverage adequacy can improve policy formulation. Public awareness. Shifting consumer perceptions from insurance as savings to insurance as protection is essential.